Welcome everyone to our follow-up webinar for the Henry at Rosenberg. My name is Hayden Harrington, along here with Dustin Miles, my partner, we're part of the Henry at Rosenberg sponsorship team, and so we're really excited to bring this opportunity to you guys. We're just going to go through some interesting facts and figures that we've learned along the way since we've been under contract. We're actually really excited about this opportunity, and some exciting developments have happened since we were initially looking at the deal. So we just wanted to keep you guys up to date and share all the details that we have on it. Next. One of the really interesting facts about this deal is the performance over the last 12 months and then more recently as well in the last quarter. So as you can see here, this is the average effective rent per square foot in the growth trend over the last year. So over the last 12 months on average, it's grown about 10% year over year. And then in this recent quarter, it's grown almost 18% in just the past few months. So we're really excited about this because this is income growth that's happening at the property without any money actually spent on the property itself. So this is natural organic growth taking place in the city of Rosenberg at this property specifically. And it just really goes to show the strength of not only Rosenberg itself, but also this asset in particular as well. So we're really excited about this. This is one point that we really pay a lot of attention to, and we're really excited to see we've got strong income growth here at the property. Next.
Yeah, so my name is Dustin Miles, and I'll be talking about demand and interest rates and all that good stuff. So interest rates have been going up, and the one thing that's very interesting, as interest rates go up, it becomes more difficult for your especially your first-time home buyer to get into that home. And in the Rosenberg area, and in particular right behind our property, they're building homes. And for Houston, kind of the suburbs and all that, the homes that they're building are kind of in that middle to higher end. And so the homes that they're being built are between $300,000 and $500,000. And as interest rates do go up, that makes it more and more difficult to not only have money to put down for that payment, but then also your mortgage payment and all that. And one thing in particular that was really attractive for us for this particular area is the gap between rent and home ownership is actually widening over time. We look at that. We do a lot of research before we offer. And that was one thing that really stuck out to us that, frankly, we haven't seen that in some other areas that we have, bid on and looked at and things like that. And so as homeowners are being priced out, they're being forced to rent. And then in particular in this area, there's no new developments in process. There was a deal that Zen lease up coming out of lease up, and but after that, that's pretty much it. There's nothing else on the horizon. Everything else in this particular pocket is 95-97% or higher. So we're just really excited. There's other parts of Houston and in DFW where there's apartments going up and left and right, and so you have to worry about potential competition and things like that. But here there's not a whole lot of developments, and the good thing is if there is a development that comes in like the one that is in lease up and finishing up with lease up is they are they're top of the market submarket rents. And so, a new deal is developed. It's only going to raise our ceiling, and we've seen that at some other assets in Houston as well. And then, again, as I was kind of alluding to, there's limited competition in this area. There's other pockets of Houston where we only have a handful of comps here. There's other pockets of Houston where we've because we look at a lot of deals and, there's 20, 30 comps. And, here there's not, not a ton. There is a lot of development in this area. We just got an updated survey. They're going to be putting in a Compass Bank actually across the street from our property. There's a Starbucks that just came in. There's a big box Lowe's that's there currently, and then there's a lot of other retail that's slated. And then, as I mentioned, there's single family homes being built behind the property that are in that 300 to 500,000 range. So we're really excited about the future of this area.
And then this is our signature brand, the Henry. So the property is actually presently called Fountains of Rosenberg, and we're going to be rebranding it as the Henry at Rosenberg. And then we've got two other assets in the Houston area that are the Henry at Deerbrook and the Henry at Liberty Hills. And we do this for a number of reasons. First of all, being it's really cool because it's actually named after Dustin's son, Henry. So we've got his reputation that we have to uphold. So it means a lot to us. And then on the operations side, it just makes everything that much more efficient. As you can see here, this is our interior scope, the types of materials, all the furniture we're ordering from the same vendors, all of the unit finishes and fixtures are all the same. The plank flooring and the colors we paint on the walls. We do this at all our assets because then we don't have to reinvent the wheel. So the moment we take over Fountains of Rosenberg, we can immediately rebrand it. We know what we're going to call it. We know what upgrades we're going to be doing to the interiors. And then we'll go to the next slide here and actually show you the exterior colors, amenity schemes, and signage that we're going to be incorporating here as well. So as you can see, this is the Henry at Liberty Hills, one of our other assets actually in the Houston market. We've owned it for about 18 months now. As you can see, our signature signage and with our blue, there's an exterior rendering. That's our exterior paint colors that we'll actually be putting on the Henry at Rosenberg as well. And then we've also got an example of some amenities that we're doing over at our Liberty Hills property that we're going to be doing a very similar scope here at Rosenberg as well, because it offers a lot of green space that we can really improve and work with our landscape architect to be able to enhance. So again, this is all kind of by design, because as we grow, our systems and processes just get that much more efficient. And now we're on our third Houston and our third Henry deal, and we've been able to refine our systems, refine our processes. We have our brand down, we have our websites ready to go. And tenants are actually starting to recognize the brand around Houston as well. So we're building up that brand's reputation as well, which tenants are getting to know as nice places to live. And so it's really, everything's very synergistic and works together. And that's a big part of our business plan, is we're buying like type assets in similar areas, like Dustin just touched on, that have low supply, high amounts of demand. And then we can roll out a similar scope on the CapEx side as well. And if you've watched our first webinar, we walk through the entire presentation, you'll know that Ruben Ortiz of Sand Construction is actually on our team as well. He's got his own construction company that specializes in multifamily, and I actually office with him as well. So we're able to knock these business plans out really efficiently. And speed is key in multifamily, and we can really, the quicker and sooner that we can upgrade these properties, we can increase the value, and that impact, positive impact gets passed down to the bottom line and to the investors.
So I'll be talking about our portfolio, and Hayden touched on some of that, but just wanted to point. So this, the picture on the left is the clubhouse for the Henry at Liberty Hills. So as Hayden mentioned, we have our colors, have all of our light fixtures. It's we're rinse and repeat, and so and when we do that, we're able to move quickly. People know what to expect, and we deliver a high level product. So to kind of dive a little more into it, so these are the other two assets that we own in the Houston area. As Hayden mentioned, we've owned the Henry at Liberty Hills for about 18 months now. It's gone really well. We redid the clubhouse. We are in the middle of doing the exterior amenity space. And then we will be painting the exterior actually starting next week. So really excited to kind of wrap up projects there. We had installed a new monument sign, and so it's just been a great asset for us. And then Deerbrook, we purchased and closed in December of last year, and so that the clubhouse with nice transformation, and we'll look at some of the pictures here in just a minute. But and we're getting right now we're looking to kick off the exterior paint there, and looking to upgrade the exterior amenity space as well. So we work with a lot of the same vendors, designers, things like that. So again, it's just we have a process, and so rinse and repeat, and so we just go reach out to them. Hey, we have this project and this scope, and so we're able to knock things out quickly. So this is a before and after of the Henry at Liberty Hills. So on the left, this was built in 14. And so not that old, but a little dated, and so we kind of brought it up to 2022 standards. And so yeah, we're really excited. We've gotten a ton of compliments. It really brings a fresh energy to the tenants, to the staff. The staff are excited to work there. They're proud of when people walk in. They get a lot of compliments, and wow, this is a great place to live and to work in. And so our philosophy is we want to take care of our staff, we want to take care of our tenants, and we believe everything else will kind of fall into place after that. And then this is the clubhouse at the Henry at Deerbrook. So this was just finished up actually pretty recently. And so if you look on the left, it was just frankly not super inviting. It was kind of dark. And so we were able to knock out that back wall, really open up the office, bring in a ton of light. And so I mean this office, it's been a complete 180. We've gotten a ton of compliments. As soon as people walk in, it's wow, this is a great place. And and so we're starting on we're going to start on the exterior paint here pretty soon. So as people drive by, that wow factor will kind of draw people in. And then we're also going to be working on the exterior amenity space here in the coming months. And so it's just a way to draw people in. Our staff is again super excited to work here. Our tenants, our residents are excited to be here because they're excited about the changes. And we're excited to just improve the property, improve the area. And again, this asset 2007, 2008, so it's not that old. But neither property, the owners had really honestly put any money into them. The interiors were super plain. We've seen C-class properties with nicer interiors than what were at these properties. All of them had white appliances, and I guess Liberty Hills did have some black, but just not even two-tone paint. A lot of the units just and then very dated flooring, the original fixtures. So just no money spent at all. So we're excited to transform the Henry at Rosenberg as well. Again, it's kind of we already have our processes. We have our tool kits, we have our colors already picked out, and so really it's rinse and repeat, and ready to dig in. And then This kind of shows where each property is at. So we're super excited to kind of dig in and really kind of fill out, our goals. We'd like to grow a portfolio in Houston, and we're not out buying, all over the country or anything like that. We're buying, where we know. Our management company is based in Houston. They're probably about 20 minutes from the Henry Rosenberg. Hayden's dad lives 10 minutes from the property. We know this area really well. And so we want to grow smart. We're not, not even buying all over Texas. We're focused on DFW and Houston, and just, looking to want to grow smart, want to grow a nice portfolio, and we want to give, we want to focus our attention on areas and in metros that we know very well, to give our investors the best opportunity to get the greatest return, basically. So I think that's about it. One thing I did want to kind of leave off on is we did get some updates on our taxes for the Henry Rosenberg. So, excited to see that the taxes actually came in 70K lower than what we had expected for our year one. We worked very closely with a property tax consultant, and we do that before we offer. We work with our property tax consultant, our management company very closely, our lender, our insurance folks. I mean, we do a lot of work before we even offer on these deals, and so excited that our conservative underwriting was quite a bit below. If you take 70,000 and divide by 4 cap, that's 1.75 million. So we're excited about this property and ready to dig in. Hope you'll join us. Thank you.